Hey everybody, welcome to Bura Tech. In this episode, I'm going to be talking about the upcoming Udemy's earnings report and the number that you need to be looking for to make sure that your investment in Udemy is going to grow strong. All right, welcome back. Okay, so let's take a look at the stock before we move over here. So, by the way, I thought that this was today, the earnings call, but it's actually tomorrow. The 9th. So don't worry about that here. But one thing I do want to talk about here is that there is some consolidation here between a range. And that is about $17 and, well, let's say about 14. So we've consolidated, well, basically for the last month or so in this range here. So we've had a downtrend. That downtrend was broken and now it's consolidating here. Now, one thing that you need to look out for tomorrow is that if Udemy does rebound, right, and has a great morning, but then it starts to sell off midday-ish, you'll know that the earnings report is not going to be good, okay? This is just a prediction here. It may or may not be correct, but generally if by midday, like if you're looking at this chart here, by like, I don't know, 12 p.m.-ish, it starts to go down. It means that the information has been leaked to bigger partners, and then they're going to liquidate some of their shares. Now, like I've said in the past, the thing about this particular quarter is that you can expect this quarter to be good. Okay, this is not the revenue report that you really need to be careful of. It's the next one because the biggest time for e-learning is November, December, and January. Now, I don't know if they're going to capture January sales. They might do that. I don't necessarily know exactly what their cutoff date is. But if their cutoff date is like January 10th, then you can expect all the New Year's crowd to be encapsulated in their earnings. And it might be really good. And you might see a lot of action going up, but then you'll start to see a sell-off. And then it's the next earnings report that you would consider it to be a lot worse. Because if they capture January sales within this report, then the next report is not going to have it, and February is not going to be good. March and April maybe are okay. Things really do slow down the first 3 weeks of February. It's always like that. Every year, and the reason is that consumers are spent from November, December, and January. Now, of course, what you're saying is that there's UFB. And if you don't know what that is that it's Udemy for Business. That is a subscription model for businesses, and that's kind of cyclical, which is good. And to be fair, that's actually a really good thing. And you really, and you really don't want to. That's something that is good, obviously, for the business here. However, let's talk a little bit about the number that you're going to look at here. Now, by the way, if you haven't been to investors.udemy.com, they actually do a really good job at, just basically, I think they're forced to do this. Anyway, you can go to the SEC filings here, and you can take a look at here. And I'm just going to look at the last one because I really want you to look at, and I'll zoom in as much as I possibly can here. And I really want you to take a look at this here. These are the numbers that you want to look at here. So in 2020 here, right, you can see that the consumer was 91 million in 3 months ending, okay? And then you can see it dropped a little bit. So as you can see, what they're going to do here is that it's technically a loss of 13%, okay? And then if you look at the 9 months ending, we had 248 million, and then we also had 251 which is a growth of 1%. Now, what they're going to do is they're going to say, hey, look, well, this is the growing segment, so we should totally focus on the enterprise bit here. And the thing is that, yeah, they should, but the number one numbers that you need to look at is the consumer side, okay? The thing is that Udemy needs to just be the App Store or the Steam of the e-learning world, right? That's all they really need to be. And having an enterprise solution is good. In fact, it's almost the secondary business here. In fact, I should probably do a whole episode about Skillshare. It'll be a slightly higher production, but I do kind of want to to do it. There's something I wanted to do for years. But anyway, so you can see here that obviously in 2020, with the pandemic and people spending time inside, e-learning was a major priority, okay? Now, we can see the flip side of that. If things truly do open up, people are not going to want to spend time in front of their computers, because even I don't want to do that. And I love, A, spending time by myself, and B, spending time in front of a computer. And even I just want to spend less time in front of a computer, right? You know, and that's good for me, but what does that do for other people? Right? Like an extreme extrovert, they're not going to want to learn online, right? So we might see a rise, a dip, and then a rise again, because once people start learning online, they'll realize that it is a very efficient way to get from A to B, which is the whole point, right? So anyway, so this is, you know, loss of revenue, and we really want to see these kind of numbers on the consumer side. Now, I don't think they're going to do that. Right? I think that they just want to go down the enterprise road, because enterprise plus subscriptions equals a higher valuation. But as I've talked about again and again and again, that's not the right road to do. You want this number to be 4 billion. Well, maybe not this. 4 billion a year. So per quarter, you want this number to be about $1 billion. Okay? $1 billion a quarter. And the reason why you want that is because if you can get people to make money, it will attract top talent. Because if you think about it, just money is paying for, well, talent. That's all you're really thinking about here. So that really needs to be, you really need to see the growth in that. And the long-term projection of the company is on the consumer side, okay? And how do they do that here? Now, this is what they're gonna say, is that they need to basically change the Rev Share. And they change the Rev Share so that companies like mine can make, you know, to make $10 million a year or more. So if you look at this Rev Share, which I made a whole video about, by the way, and you can check it out. It's really good here. But basically, if you look at some of the other marketplaces that do way better than Udemy, we could look at the App Store and Google Play. This is what they take, right? And if you just think about it, like if you were to go to a person on the street, right? You know, if you were just to go to any person on the street, could you say, yeah, could you make money putting games in the App Store or Google Play? They'd say, yeah, right? Can you make money with making games on Steam? Yeah. Microsoft consoles, Sony, PlayStation. Yeah, you could. Switch. The Epic Game Store, not really well known, but you know, that's just what it is. But nobody is going to want to make money on Udemy, because with this kind of rev share, it's almost impossible to build a scalable business. Now, you have to ask the question, can I build a scalable business on the App Store? Yes. By producing content, by the way. Yes. Can I do it on Google Play? Yes. Steam? Yes. Microsoft and Sony? Yes. Epic Game Store? Yes. And the other thing I can add in here is I could add in the Unreal Engine. Right? I could add in the Unreal Engine. And this is awesome, by the way. So if I just kind of do this here, Unreal Engine, it's free to use, and get this. Right? And maybe change the color here to something else. I don't know, like this here. They only take 5%. Right? That's amazing. Right? So very, very good. Maybe make it yellow. Yeah, I'll make it yellow. So you get the idea, right? So the Unreal Engine only takes 5% of everything here. And so what you need to do in order to make this work is you need to copy the rev share on the consumer side to be more like this. And I've laid it out here in a very succinct way here. So organic, 30%. And this is just what everybody else does, okay? Promotional, okay? And if you don't know what promotionals are, is that in Udemy, they have a system where you can go and sell to Udemy your customers. That is the number one feature on why I love Udemy. And it's really good. And if you want to make a Udemy competitor, you have to do that. I tell every marketplace to do this. None of them implement it. So it's really that simple. And the reason why is that if you want to sell a course to somebody, you have to sell them on your platform and the course. But the promotional announcement, people are already on Udemy. You don't have to sell them on the platform anymore. You just have to sell the course. It's easy, right? And the reason why I say 94%, it's 3% credit card transactions and then 3% for Udemy itself. So they capture at least some of the revenue here, okay? You can even make that, 5%. I would be happy with this, but 94% is a good number. Ads, 50%. UFB, 50%, not 75%, okay? Those are the things that they need to do. And the other thing that they need to do with UFB is, they have a personal subscription. They need to completely get rid of that, right? And I'm going to write that down. And I will format this off of camera here. But you get the idea what they're going to do here. So let's go back here. What you want to see is you want to see this number go up, right? This number has to be more every single quarter. Then their goal should be $1 billion a quarter. That should be their goal. Better too, but $1 billion is probably what they need to do. You do not want to see losses on the consumer side. The more that happens, the more top talent will leave the platform. Okay? The only way that they manage to get top talent to stay on the platform is they give them the UFB and they make it, better than what they would make in industry. And that is not good because most of the top instructors are solo instructors, okay? They're not a business. And I can tell you, after doing this for 10 years, it's so much better to make a course with a bunch of people than it is to make it by yourself, okay? I did this for years, and in 2016, I completely managed I specialized a staff to do other things. I got someone else to do the video editing. The video editing is now better. I got someone else to make tutorials. And here's the thing. If you don't know what specialization is that specialization is where you give the task to another person and they do a better job. And that's exactly what I've done with my company, is that I've basically have like the marketing, the video editing, everything else is done by a specific person. It used to all be done by me, and I basically did everything by myself before then. And I can tell you that the product is so much better. And if I had more money, I could probably do this even more. But one of the things is that Udemy does completely stifle businesses, and they should not do that here. I think there's only one, maybe two in the top 10 or maybe top 20 where it's a business, and they don't like that. They want it to be a solo instructor. And their number one reason, which I would totally get, would be that if you had a business that made a lot of money, right? Why would they ever, they could just do something else, right? Or they have too much power. And that's just the consequence of running an app store. Apple's had it, Steam's had it. It's just what it is. In fact, you know what? I think the people on Steam really don't like Epic or the Unreal Engine, okay? And so it's just what it is. The Unreal Engine's a great engine, and they make games for Steam, right? They also have an Epic game store. So there's some competition in there. But the thing is about the Udemy and the e-learning space is that it's really not competitive. It's not as competitive as, these other ones here. And that really needs to change. I cannot, A, take a loan, and B, make money off that loan by making Udemy courses. And I think that is the biggest failure of the platform. I need to be able to, 1, produce courses, and 2, scale my business. And it's hard when, again, when this is going down here. So the thing that will make Udemy stock go up is making their marketplace scalable. And in order to do that, they need to adopt this revenue here. And what a lot of people might say that, why would Udemy change their Rev Share if they're getting less money? Well, 30% of the billion is more than 60% of 79 million, right? And that is why they need to loosen their restrictions. They need to basically make it so that anyone can start to build a multi-million-dollar business making courses. And there isn't a platform that does it. And one of these days, maybe Microsoft might throw their hat into the ring. Apple could throw their hat. Apple could do this tomorrow. They could make a Udemy clone and they could make it like the App Store. They could do that. And then if that were to happen, well, the stock would not be worth much. Okay, Apple already has some other things that are related, but they could do it, right? I remember when Apple didn't have a music subscription service, and they and then they basically squashed all the competition before Apple Music came out. Well, guess what? Apple Music, basically there could be an app store for online courses. They could do that. Apple could really do that. In fact, I should probably make a whole video about that someday. But anyway, so this is what they need to do here. They need to adopt this here, plus a bunch of other things that they need to do. And I'll talk about that here. So please be sure to like and subscribe, as I will be talking about the exact road plan that Udemy should do to become, well, a 10 billion. Well, they're already worth quote unquote 4 billion. But if they had 4 billion in sales, they might be worth 20 billion. And that's really my whole goal. Because remember, Udemy is the unelected leader of the space here. Just like the App Store was the unelected leader of the mobile world, Udemy is the unelected leader for the e-learning marketplace space. And they do have somewhat of a responsibility to make it, better. And not only better for, well, the teachers, the students, but for the shareholders as well. So I don't see Udemy being a good acquisition without this kind of rev share. Because if Apple or Google or Steam or Microsoft or Sony or Epic don't do it, then why would it be good for Udemy? And the answer is it's not. And the longer they delay this, and the more money that gets leached from the consumer experience, the worse off the stock will be. The enterprise is not going to be the savior of the platform here. Because one of these days, a competitor, a truly worthy competitor, is going to come out, and that's not going to be good for Udemy. So they should get ahead of that and change the rev share to this immediately. All right, so that concludes this video. I want to know your thoughts down below. Please comment. We don't get enough comments on this channel, so please comment away and share this video, because I do want to talk about it here, and I'll be bringing this up more and more, because this is the one thing that Udemy should do. Thanks for watching, and I'll see you in another video.